practices. It says they are unacceptable and misleading. Emphasized that while the Commission has the authority to impose fines and imprisonment, the first step will be to dialogue and advocacy. Given his keynote address, the Executive Vice Chairman and CEO of FCCPC, Mr. Tunji Bello, revealed that recent nationwide surveys conducted by the Commission uncovered disturbing trends. The findings shows disproportionate pricing on imported foods, inflated prices on local goods, and evidence of market association engaging in price fixing. Now let's get to our first topic of discussion today. According to the National Bureau of Statistics, the gross domestic product improved by 3.19% year-on-year in real terms. That's in Q2 of 2024 from 2.98% in Q1 of 2024 and 2.51% in the same period of last year. Now, this report adds that the performance of GDP in the second quarter of 2024 was driven mainly by the services sector, which recorded the growth of 3.79%, contributing 8.76% to aggregate GDP. Let's start talking, and joining me live in the studio is the Chief Investment Officer at AfriInvest West Africa, Mr. Robert Omotunde. Good afternoon. It's good to see you again.
Thank you very much for having me. Pleasure.
Yes, I think it's good to start with your overview of what you think of these figures. 3.19%, that's what we see from the NBS. Before we go into sectors that contributed to this growth, what do you make of this figure in its entirety?
Well, I think that the GDP figure released now has again shown, as economists will say, that GDP is not a good measure of economic performance, right? Because it's just, you've read out the numbers, 3.19% growth, coming from the previous quarter's growth of about 2.98%, which is also better than what we saw in 2.51, in the corresponding quarter of 2023 at 2.51%. So it's positive to see that the economy is growing. But when you drill down to, the basics of the economic activities going on within the country, it leaves, less to desire. So you see growth, but this growth is not translating into economic welfare for the people. People are poorer than they used to be. Don't forget, growth in GDP represents growth in the income, aggregate income of the country. So we're saying that the income of the country is growing, or if you like, the economic activities within the country, if you are measuring the product, is growing. Or if you like, you say that the expenditure profile of the country is growing. Because, you're either measuring gross domestic product, gross, domestic income, or gross domestic expenditure. In either case, you aggregate the numbers. You're saying that the activities or the income potential of the not potential now, the income reality of the country as at that point in time is what it is. So meaning we are saying that we have grown by 3.19%. But I'm saying to you now that, some people will talk about inclusiveness of this growth. That you're saying.
Very important.
Yeah, so how broad base is this growth? This growth in aggregate terms is good, but can you say that, for instance, for the household, the consumers, that make up the major population, right, the so-called, masses or the mass population, can we say that they have benefited, right, from this GDP figure that we are seeing? The answer is clear, it's no, right? Now, but this also shows that for us to be growing at 3.19%, given the astronomical level of inflation that we are facing in the country, what inflation does is that it actually reduces the purchasing power of the consumers. And when purchasing power is reduced, it means that the activities, in terms of the economic activities, will also be reduced, because you are going to have to spend more money in nominal terms to buy, the same level of output of produce that you have bought before. So if I'm going to interpret this number, so to speak, it's saying to us that despite the inflationary pressure that the country is facing, that overall the country has been able to increase its output of economic activities overall. Because, if I do a hypothetical, scenario, imagine you put 1 million naira into a particular produce when inflation was at, say, 200%, and as compared to when now that we are dealing with a close to 33.4% level of inflation.
Yeah.
Now, what 1 million we buy in terms of output, if you pick a particular commodity, say a bag of rice, how many bags of rice can you buy with 1 million naira when inflation was 20%, compared to how many bags of rice you can buy now when inflation is now 33.4%? The answer is clear. You're going to have to buy lower output. So if you measure the economy at that point in time, you will see that you will have a decline. But now, the figure is showing us that we have an increase, 3.19%, year on year, for quarter two. So that what that is saying essentially is that we have grown output despite the inflation. Maybe it speaks to the resilience of the Nigerian economy, but I don't think that this is a figure we should celebrate. And as we know, it's unfortunate that since 2014, the economy has been going downhill in terms of growth numbers. This is an economy that was growing at an average of about 7% on an annual basis for the first 10 years before 2014. And from 2014 to date now, we're talking about, almost 11 years afterwards, we are still, having an anemic level of growth below 5% threshold.
And there's always that argument that we must grow. Sorry, I needed to interject you. That we must grow above our population growth. Right.
That's the right thing to do.
If we don't, that means more people are drifting into poverty.
People are poorer. Productivity is lower. So if your population is growing, right now, I think we claim that we grow at an average of about 2.5% or so, 2% or so. Yeah. Now, you have a growth rate of 3.19%. That's positive in the sense that, you have a slower growth in population than the growth in your economy. But the point here is that, like you said, by the time you drill down into what are the contributors to this growth number.
Financial and insurance sector accounts for about 6.5% of the GDP.
Thank you.
Major driver of economic growth.
You see, if you're seeing insurance and, the financial sector contributing about 6.5% to this growth number that you're seeing, it also tells you that most of the economic activities you are seeing here may be corporate sector driven. You see my point now? It may be corporate sector driven because mostly, as the insurance, those who are in the insurance business, who are the bulk patronizers of their business, who are those who take up most insurance. These are corporate organizations who have fleet of vehicles, fleet of trucks, or buildings that they need to insure, because that is the right thing to do. But for the generality of the populace, people are not mostly taking insurance because, number one, their understanding is low, and then number two, their consumer wallet, or their pockets may not be able to support it, And even if you can, how many of them can afford most of those items that you will have to insure, right? How many Nigerians can afford to buy a car? We're talking about the car market that is very expensive right now. So, this is just what has been now secluded to what I can call the middle class. The middle class in the country, they are the ones that can still afford to buy a car. Someone that is still struggling to eat or to feed. We not think about doing that. And as you can see, food inflation in Nigeria is very high, which means that when you check what people are earning, right? We talk about minimum wage now at
70,000.
70,000. 70,000. It won't even buy you a bag of rice, And for a household that has maybe a small family of 4, the father, the mother, and 2 children, they may struggle. In fact, they will struggle to feed on that, minimum wage if that is all they earn. So those are issues that the GDP figure will not address. And that's why economists will say that there are more indicators we look at, like Human Development Index, to be more holistic in terms of looking how the economy is behaving. Because if I look at GDP only, I'm only focusing on income. And if I disaggregate this income, you will see what is your own contribution, as an individual. Or look at the wealthy Nigerians, the billionaires, right? The activities also form part of this figure that you're seeing, right? Some time ago, we analyzed that one particular company that is listed on the Nigerian Stock Exchange accounted for 10% of the GDP growth that we recorded at some point in time. So what proportion of the companies listed on the Nigerian exchange accounted for this? A portion of this growth that you are looking at. Because when you look at that, and then you now look at the inclusiveness of these growth numbers, right? Can people really feel that their life is better? Because it's an income measure. It's an income measure, right? And it is expected that what you earn, what you make in terms of income is what you spend. And then, proportionately, that is the same thing that goes into buying any produce, which is why we call it gross domestic product. So the thing is that we shouldn't celebrate this figure. We know that the economy is going through a lot of issues that need to be addressed. Inflation is one, exchange rate is one, and all of these macroeconomic indicators are also contributing to the level of growth that we are seeing right now. We may say that that's some level of growth, but excuse me, Nigeria is not United States. That, as you know, if I liken Nigeria to a company, Nigeria should be a value company where there is still much potential for growth. Unlike the United States, that I would liken to a growth company because they have grown significantly, and then you don't expect that the level of growth will be as significant. Nigeria does not have any business growing below 10% on a quarterly basis when you measure it year on year. And in fact, on an annual basis, we shouldn't have any business growing less than 10%. So these are issues that I think that we need to focus on in analyzing this current GDP figure.
Transport, storage, and other services contracted in this period or under review. Why would you think that happened?
Inflation is the answer.
High energy prices.
Oh no, yeah, high energy prices. Okay. Not just that, but because that when you are measuring activities in the transportation sector,
yes,
it's talking about how much patronage people are getting, commuting from one place to the other. All of those factors are the things you consider. But with the level of income that has not increased, the same level of income, right? And people then have to deal with a higher transportation cost. So what you will see, like I said, you notice that, what GDP is measuring is not just the nominal. And that's why when they give us this figure, MBS will always give you the nominal GDP. Think, for instance, our nominal GDP is not of 200 trillion naira. But when you analyze our GDP in real terms, as provided by the MBS, you will see that our real GDP number is just within the level of 70 trillion. So that is to tell you that it's just convenient for us to be able to measure this in numeric terms. But what we are actually measuring is activities. If I bought a bag of rice this time, second quarter in 2023, I must be able to buy a bag of rice and a quarter in this particular quarter for me to say the economy has grown. So it's not just enough. But if you look at the scenario I just painted now, a bag of rice a year ago may sell for, say, 50,000. And this year is selling for 80,000 naira. If you measure it nominally, you will say we have grown. But that's not what economists measure as growth. So the growth you are seeing here is in real terms. You see what I mean? So when you see transportation contracting, is a direct result of high inflationary pressure that the country is dealing with. And because even though in nominal terms, if you analyze the same transportation number, you will see the growth because of high inflation. But in terms of, real figure, you will see that the sector has actually contracted. And it may not improve until we can deal with inflation, which is really very disturbing for the economy at the moment. If this economy grows at 3.19 with this high level of inflation, if we tame inflation, this figure can double overnight.
Now let's talk about it. Let's wrap up on that note. Let's try to talk about how we can rein in on inflation. Many would say that most of the economic policies of government, analysts also clamored for this. Removal of subsidy, opening up of the foreign exchange market. Yes, some said it shouldn't have been done side by side. A lot of arguments have come with regards to these reforms. But one thing is that these reforms has been undertaken by government already. So I think we should just look for ways to now address the fallout of it. So what do you think? Are there quick wins?
You see, removal of subsidy was not negotiable. Government did Government did the right thing by removing subsidy. There are things that we talk about. Before the removal, like you said, a lot of analysts called for it because we believe that it was the right thing to do. Why? Because the country does not have the revenue profile that could support continuous payment of subsidy. At some point, we had porous borders such that every time you were subsidizing in Nigeria, you were actually subsidizing all the neighboring countries in Nigeria. To Nigeria, Republic of Benin, Chad, Cameroon, all the countries that bordered Nigeria, you were essentially subsidizing these countries. So, but even now that we say we have removed subsidy, the truth is that there is still subsidy.
It's back.
Yes.
Yeah, or it's still existing.
There is subsidy in some
it.
form. But the truth is that the government cannot continue to fund it. Look at this GDP figure we saw now.
Yeah.
You will see that oil contributed only about 2.8%.
Yeah.
Just about 3%
Yeah, I saw that.
to the overall GDP.
Yeah.
I mean, there was a time that oil was accounting for close to 10%. And that was just distant past, like some, 3 to 4 years ago. But now the story has changed because, again, production from oil is also reducing on a daily basis. So government is not making as much revenue from oil, right? So it's the non-oil revenue that the government is supporting itself with, and a lot of borrowing. And I tell you, there's a lot of borrowing going on, which the government continues to do from the local market. Now you're seeing that the government is, trying to sell some dollar-denominated, bonds within the local economy. When that is done, if the government needs to do more, they will go externally to borrow, right? And then we continue to fund our budget. But I think that where most citizens are clamoring for it was, to see how government can be a bit more prudent in governance. But it looks like maybe we should look away from governance because it doesn't look like government is ready to cut the cost of governance, because again, that's the major attraction for most people that are going there. But I think that in the context of all of the policies that we are making, we shouldn't make further policies that then worsen the situation. And that is where I come to what the central bank is currently doing with interest rate hikes. Now, what the central bank is doing right now is hurting the government. It's hurting the people.
Now that inflation is declining, do you think they might change?
Inflation is not declining. That's the truth. That figure you're seeing, it's a base effect factor.
Yeah.
In the real sense of it, when you say inflation is declining,
I get your point.
as a bag of rice reduced in the market, that's not. So, but what the central bank is doing can, potentially, in fact, is potentially harming the government more, because the government is having to borrow. I mean, look at the activities that's happened in the local debt market in the last 1 week. The DMO came to the market and reduced the rate on bills, right? And reduced the rate on bills to suggest that, see, we can't continue to pay this high interest rate. The central bank came out the following day to raise OMO and increase the rate again. Now, you see, this is the government is crying foul. Even the private sector is crying foul because this high interest rate environment is not sustainable. You expect the the private sector, as we say, to be able to come to the local debt market to raise issuances. And as they are doing it, they are borrowing at an astronomically high interest rate environment that their revenue profile or their profitability levels cannot support. And all of this continues while the central bank stock to is gone, thinking that they are fighting inflation. I beg to differ. And those are some of the quick wins that we can focus on in order to better the economy for our people.
Mr. Robert Omotunde, it's always nice having you here. It's not more time to talk about Nigeria's economy, but I thank you so much for your analysis. As Chief Investment Officer at AfriInvest West Africa, Mr. Robert Omotunde. Enjoy the rest of your day. All right, we'll take a break. When we come back, we have live pictures also from Edo, where we expect the PDP governorship campaign to also be flagged off in Ubaja, Esan, Southeast local government area. Business Nigeria continues while all of that would also be on the other side. We'll take a break and come back with our discussion. This is Business Nigeria, TVC News.